Good afternoon. This is the Eye of the Storm podcast with the Elliott Wave weekly update for the S&P 500, being recorded on Friday, December the 5th at 4:04 p.m. Pacific Standard Time. I'm going to begin on the SPX, the cash market for the S&P 500, and I'm on my maximum monthly chart. I'm going to go back and I'm going to start the way I have been all along. And the reason that I really want to go over this today and kind of give some detail is that what really is before me here, right here in this box, is 100, and well, this is 1927. So basically, we have about 97, 98 years of data. But this is that many years of economic data, things that occurred to the United States, things that occurred globally, locally, things that affected the economy of the United States, how we lived, what we went through, what happened to our markets during these periods of deflation, inflation, um, collapses of various reasons. It's all there, and it's there to be studied and to learn from, to be honest with you. So again, I wanted to start with the largest count that I have on Elliott Wave. Elliott Wave, as most of you who have ever stopped by, you already know this, is a methodology of counting the waves. And what R.N. Elliott realized through his own observations was that there are defined patterns in the markets, in equity markets, in gold or in silver, in something that is publicly traded or just is traded. There are patterns that seem to follow human emotional patterns as well as just economic. So we can use Elliott Wave to plot and kind of decide if we're starting with wave one and we have five, that one is the bottom and five is the top. Is it an economic cycle? Well, it might be, but what goes into that, and how do we count these waves, and what are their personalities and the characteristics? That's what's been developed over the last 75 years. And there have been, a lot of people that pick up Elliott, but the thing is that Elliott continues to be functional, even in today's world of algorithms. Elliott, as best as they can do, to be honest with you, gets programmed into an algorithm. So the algorithm can function and actually tell you what the wave patterns are. And because that artificial intelligence has gotten so much advancement, that it's just going to be a matter of time before it is possible to really be including human emotion at particular times. So we go from the Great Depression, then we come out of that, and then right there we go into pretty much as we get out of the Depression and we start building again. So 37, and then we go back down because of World War II. And so here is the U.S. into World War II, and then we've got all this, but then it was the Reconstruction after that benefited the United States the most in terms of construction and building and providing and money, and just we were a country that we were not bombed to the ground. And so it was a very beneficial time. We can go back and look at, for those that are still around that were active in the markets or aware of what was happening economically back in the late 60s into the 70s. That's also pretty important because it was a very strange, it was a difficult time, even though everybody still worked and we still functioned and we still had things, but there was a lot of uncertainty. There were different periods. And then we went into the Vietnam War. So there's always been wars, always hung around throughout through our history. But again, economically, we came out of that pretty much 74. We started to climb again. And then we got up until the 87 crash. And believe it or not, that's it right there. And what that did, and then we went to the next phase. Now, mind you, during each one of these phases, the biggest thing that happened in 1973, 74 was Nixon, as president, dropped, abolished, got rid of the gold standard, which is this country, as most countries, were backing their currencies with gold. So there was the gold standard, was gotten rid of. And in its place started fiat currencies. And what guaranteed the fiat currency? The good faith and credit of the country that issued that currency. So that was a whole new ball game. And we see what happened. We started to build, but this is how we started to build. We were building on debt. And then we got up here, and what was that? That was a point where mortgages, out of control mortgages, out of control, almost markets, banking, a lot of things that weren't regulated or found holes or whatever the situation was. And we had the great financial collapse. There's the crash of 87, the great financial collapse of 2008, 2009. And what was the way out of that? Just fund your way out of it. Corporations, we saw bank failures. We saw big national banks being merged into one another. And if you were to look at it today, you'd be like, really, that's what happened? It's like, yes, that's what happened within this millennium, within this century. This is 2009. And then so they printed money. That's what you can do with a fiat currency. You didn't have to back it with gold. You could do it just saying, okay, we're just going to go print a bunch of money and inject capital into the system. And then look what it did. What a wonderful thing. All the way up to there. And then we got stuck with the pandemic and boom, then we had to bail out the people and then boom. So basically, since 2009, it's just been government bailout. Now they're going to use that against you. So I won't make any politics on this. It's just a fact. Both sides of the aisle, people, both sides of the aisle have been a part of this. So it's like I'm not drawing any lines here, but I am saying that we are fast reaching a top of a cycle degree. And so but what's encompassing that is 1949 to wherever this tops. So 2025, 2026 to where this tops. That's a lot of history. And what's really truly in my mind going to be corrected is basically from 2009 onward. And it's going to start basically from 2022 onward. So that's been the last leg. So let me just start over. This is Grand Supercycle 1, 2, Supercycle 1, 2, Cycle 1, 2, and then we have primary 1, 2, 3, 4, and then we're in primary wave 5 to finish cycle 3. Now, what is going to be inside this primary fifth wave are going to be 5 waves of intermediate degree. I'm going to go down to here, and there's intermediate 3 and intermediate 4. This is October of 2022. So since October of 2022, 3 years ago, 3 years and a couple of months ago, this is where the market bottomed. This is where interest rates, they started to talk and pound that interest rates needed to come down because inflation had jumped and gone up really high and et cetera, et cetera. So this battle for lower interest rates has been brewing and percolating for quite some time. And again, so what we got out of this was just that, more money and cheaper because lower interest rates, cheaper money. So again, what's going to be inside now, this intermediate fifth wave, it's going to be 5 waves of minor degree, which is 1, 2, 3, 4, done. We're in minor wave 5. So I'm going to keep bringing this down. We're counting up. So now we're in minor wave 5 of intermediate wave 5 of primary wave 5 of cycle wave 3. Now I'm going to bring it down to that hourly chart. Actually, let me take it down to the daily chart first. There's minor wave 4. So here is minor wave 5. Inside minor 5, 5 waves of minute degree, 1, 2, 3, and 4. We're in minute wave 5 of minor wave 5, of intermediate wave 5, etc. You can go all the way back up. This is how close we are getting. And so now inside of this minute fifth wave, now I'll go down to my hourly chart. inside this minute fifth wave, what's going to be inside? 5 waves of minuet degree. So 5 waves of minuet degree to finish minute wave 5, which in turn will then finish minor wave 5, intermediate wave 5, primary wave 5, and cycle 3. We have inside of minute wave 5, 1, 2, and I'm placing minuet wave 3 at today's highs, our opening highs at 68.95 in the SPX, almost 68.96. I really thought at the time, yep, they're going to go, they're going to go, and they're going to give that test. This is as close as they could get it. We pulled back. There's a shot that we may just absolutely get up there, give it a test above 6,900 before we put in this next correction. So again, 1, 2, 3, we're waiting for 4. Once minuet wave 4 is complete, and that's giving that all this is going to be marked out and confirmed, we do have the possibility that this third and this fifth may have one more leg up to do before we can put that in. And then we would be testing 6,900. We would be testing a push higher towards that 7,000 mark. Now, that's kind of an alternate inside here. But the fact is, it's like we are close. I continue to look for higher levels. So people say, "Oh, you're still bullish." It's like, the action, yeah, you can call it bullish, but I am looking. I've just kind of walked you through. I believe what we're buffeting up against is a mid to long term top. If this correction in terms of that cycle, if we just think for a moment, if this is correct, and this cycle wave 3 has been underway since 1949. That's a long time. And even if I'm going to mark it, because there are accounts that they're up, this grand super cycle is finishing up here, grand super cycle 3. And you can do that. But I'm trying to be clean and as, relevant into what's actually happening in terms of degree. Now, I'm okay with it being cycle 3, but I also leave open the possibility it could be super cycle, it could be grand super cycle. Depends on who's counting and how they're doing it. But I think as long as they're not breaking any Elliott rules and paying attention, like these are a 3 and a 4, all our numbers are matching, but the degrees may be different, then that's fine. Because I think it is exactly that. I'm not going to get hung up on the degree. I'm getting hung up on the fact that we're finishing a major top in terms of just counting, because here we have 1 and 2, and so we're counting this third and everything that happened in between. And so that's what I'm telling you. It's like I believe it is getting close, very close. And so this is the area, again, to just repeat the guideline that Elliott left for us. A fourth wave in motion will find its terminus, its endpoint, within the fourth wave of one lesser degree. If we're looking for a cycle fourth wave, one lesser degree is going to be primary, and it's going to be the primary fourth wave that we're going to be looking for the cycle fourth wave to find its endpoint. And there's the box. And I'm leaving it there. Now, how long do I think it's going to take to get back to the 2009? And actually, it's 1999 to 2009, a 10-year window to possibly bottom after a 75 or 76 year rally. If just you're taking just fibs, it's a lot, maybe 10, 12 years. This is 16 years. And this is the first part that I'm looking to begin to correct. And actually, I'm looking for the correction to begin. I'm going to take this down. I'm going to come down to here. This is what I'm looking initially for it to correct. I'm going to take these off for right now. Because I need people to see what's inside. I mark this as because I'm thinking that once we do start lower, the intermediate degree, whether it's an A, whether, but an intermediate degree, A wave is likely going to come into here. And then I've labeled this in green, and the primary degree, A wave is likely to come into here. So we have to just understand that we can give the setup and what type of patterns are looking for, and I do. I don't necessarily want to go into great detail right now, but we once we drop back into a corrective pattern, so fourth wave corrective, it's an ABC. Everything within that family, we're back to, get this now, a long-term ABC. And we know now, and because I've repeated it enough time, is that inside of that, an impulse wave, which is a 1, 2, 3, 4, 5, that is it. One structure. It's a 1, 2, 3, 4, 5. Yes, different variations inside, and each wave will subdivide, etc. But it's one basic pattern. Whereas a corrective wave in an ABC, it could either come in into what we call a zigzag, which is a 5-3-5, and that indicates that it's more sharp, and be a complete ABC move. And then also we have what we call as the flat family. So we have the zigzag, we have the flat. Now within the flat, I hate to say it, there are about 11 different variations of what a market can do in the correction. And we are getting ready to drop into a very long period of time of just that. So it'll be a challenge, not impossible, but it will be a challenge. There'll be a lot of opportunity. So again, coming up, minor 5. Let's keep going up there so we can just really pinpoint. There is an ABC. No, excuse me, ABC down. That's minute wave 4. 1, 2, 3. And this particular one, just up to the what's current, you can see it looks more like it's 3 up. So you can likely count it complete. Um, but I'm going to leave open the potential that this is the 4, and it's 1, 2, and that's a 3, and it's a little 4. We don't go falling off the face. We kind of come back up, create a new high above today's high at 68.95, so 68.96 and above. And we do have some additional above 69, some resistance, some fib resistance, of course, above 69, and then also on a gamma level. It may change because today was expiration, but there was a level at 6,900 in the SPX. So I'm sure that will remain in some way, some type of a gamma level, whether it's going to be gamma 1, 2, 3, or 4, or whether we're going to be, seeing a call wall being putting in place up there. Right now, the call wall is back above 7,000, or it might be right at 7,000. So again, that continues to be a magnet in my eye. And what I mean by that, there's things sitting up there. There's standing orders that are sitting up there. So it becomes a magnet for algorithms that are going to be looking for areas to go up to that's where there's money sitting there, right? Money in the form of a position, in the form of orders. So it's liquidity. There's a whole bunch of stuff probably sitting up at 7,000, and likely even a little bit above that. So my thought is, it's like, this is where we are. Algorithms are not going to necessarily just turn away from that just because. I think it's being programmed in, and that should become, that's where they can push to. And then it goes from that point. Now, it may not make sense, but when we're looking at trading, suddenly you're going to see that 7,000 just is like, okay, it's a number and it's going to be traded. And that's my feeling. I think we get above it before all is said and done, and we're ready to begin the next. And I don't think necessarily, folks, that the market needs to make clear that it's got some type of an enzyme or stimulant that's going to knock it over. I think there's a lot of things. We get this bits of news which are now being recanted, basically saying that, well, they weren't true. Like Microsoft, like this news that came out yesterday and or the day before, and knocked Microsoft for a loop. Um, and now they're coming back saying not true. And then we had another one, and I have to think of which one it was. Um, what also got caught up in that may not have been something real, produced by that particular company. So we got a lot of stuff going on. And so, but the talk was that artificial intelligence is not going to cut it in terms of make the money that it thinks it's going to make. And I'm like, well, I don't doubt that. I think that there are companies that are totally involved in artificial intelligence that have enough cash, though they've got some reserve, that they're going to continue to produce. And there will be others that are going to be able to buy it. And so, but I believe, folks, that it stays corporate. So in terms of like, yes, we're going to be able to have a benefit and using artificial intelligence in our everyday lives, but it is actually going to be corporate because they're going to ones it's like they're going to use artificial intelligence to um, keep more of the money. So it's like have an algorithm do a human's job. And maybe that human was being paid $300,000 a year plus bonus plus meds, medical and all kinds of things. So corporations can make a whole lot more money. So again, that's going to happen, but it's going to bring its own set of what? What do you mean? How can this happen? And we're not there yet, but I think we're getting real close. We're getting real close to a point where the market realizes itself and that it is overvalued, and that that's what happens when we go into a correction. And a lot of this, folks, I think continues to point to the debt, the U.S. debt level, the level of debt, and how it's being treated, and exactly what's kind of happening within our government and what direction is it going in? And yes, I think that all is going to come through and not break the back of the United States, but I think that there will be a price to pay for what's been going on. And so I think one of the ways that the market could do that, it is like it starts to trim back. We start to correct. Now, again, as a trader, I look at there's going to be or should be plenty of opportunity for trading. So it's going to, for us as traders, it's going to remain extremely important that we're able to move in and around in our markets and trade profitably and continue to just, to earn our side of what we want to earn. And I think that corporately, the larger companies are very, very, very well placed in terms of they have so much cash right now that they should be able to survive a lot of things, an extended period of economic unease and change. So again, I'm not too concerned about that, but I don't want to jump into the future. I need to stay in today and I need to continue to trade and do what we do. So short term, and I mean short term, so looking into next week, I think that in the SPX, the count seems to be pretty clear. And what I want to also touch upon is just if when I move back and say go out to my daily, I am one, two, what happened to my three? There he is. I I'm comfortable with how everything is labeled. And yes, I can swing some of this because it's still the active, but coming from what is before, particularly from the minor fourth down, I am I am very satisfied and don't have any intention on moving those. So my longer term count remains the same, that I'm looking for the top of a cycle third wave, and a cycle fourth wave will then kick in. And the first initial 5 down to announce it, I think takes us back to April lows. So here in the S&P, that's 2,000 points from where we are. So yeah, took us 7 months to get here, 8 months to get where we are price wise. I don't know. Could take 3 months, could take 6 months, could take 12 months to get down to this level. But I'm hoping and feeling pretty strong that initially we should have plenty to trade. And yeah, that's about all I can really say about that because we got to just follow the bouncing ball. No, but I wanted to just keep in tune with when I move out my count, I am okay with everything I have. These I don't believe are going to change. This is my 5-year weekly. So that's intermediate 3, intermediate 4. If I go all the way back out, I am not looking to change any of this. I'm very comfortable with this particular count. Others may have different degrees, but I think most Elliotticians that I'm aware of kind of have the same type of account. Theirs might be different in terms of which degrees coming up here than mine. But threes and fours and finishing a third and looking for a fourth and got still basically. Now, yes, there are some Elliott folks that are pretty much saying that the highs were in October. And I basically am like, yeah, okay. I don't this high. I think this finished it all, and this is just the start. But we're close. We're close to going and taking that high out. So, you know, we'll see. We'll see kind of how it all gets counted out. Um, let's go over and take a look at the ES. The ES is a little bit different in terms of the count, but not so much on the daily. So this all stays the same. Again, this is the first marker for where I'm thinking that we come down to, and this is the minor, and that's April of this year. So I'm looking at possibility of these. Either it's going to be intermediate wave 1 or it's going to be intermediate wave A. But that's what I think will come down to here. So 2,000 points for the very first move. All right, so coming up there, here, let me take this off so we can see. Minute 1, 2, minute 3, minute 4. We're in minute wave 5. I'm going to bring it down to the hourly. Now, in here, you'll notice there's a difference. I have 1, 2, 1, 2, 1, 2. Now, this is a count that actually was alive more here than it was in the S&P. Primarily because, of course, the ES trades more hours each day than the SPX, the cash market. Cash market trades 9:30 to 4, Monday through Friday. That's it. The futures market trades in Globex. So it begins on Sunday, 6 p.m. Eastern, and it trades all night. And then we pick it up here in the US at 9:30 the next morning. And then that clock runs until 4 o'clock. So the market opens at 9:30 and it goes into 4 o'clock, and that's the cash. Then it's done. The futures market at 4 p.m. Eastern trades for an additional hour, and then it sits quiet for an hour, and then Globex resumes. So there's a lot more trading in the futures market than there is in the cash. We're coming up with the same count. And that's why before I said, see, on the cash, it's looking like 3. Here, you can basically work it through to be from that low 5 up. So initially, I think I had put this down here and this over here, still looking for this 5th wave. And I moved it because I thought, see, this gets a little bit weird for me. So I wanted to clean it up. And so it subdivided again inside. So the subminuet wave 3 subdivided, and the minuet wave 3 is doing the same. So in fact, we got that 3 of 3 of 3 move, or just 3 of 3. Excuse me. But in this case, it was a double. So again, 1, 2, 1, 2. So minuet 1, 2, sub minuet 1, 2, sub 1, 2, 3, 4, 5. It actually should be blue. I used green, but it's just the double sub. And that completed three, and then we had four, and then we had five. Yes, I'm going to leave it open that there might be one chance that we have one more little pop higher before we kind of come down. Now, what goes a little bit against that, I bring it down to 15 and we can look right there. So we get there, the five. And this looks like five down, three up, and three down. So it's kind of weird because it could be one, it could be A, and this is like A, B, and we do a C wave up, put a B wave on there, and still come down in a C wave as a part of, that one's wrong, as a part of this. So I put the A there, and then it's A, B, C, B. We put down a C wave, and that is going to be wave A. So I got to bring this down another tick. I've just got to get this into the right degree. So what we're looking at here, right, because this whole big thing coming all the way down will be the minuet fourth wave. So this finished subminuet wave 5. So it's in the subminuet ABC to form this. But so I was right to begin with. Yeah, I'm going to do it. Let's just do it that way. Keep it in the sub. So it's A and then AB, AB, and then a C coming down, and then we'll get that 4. So the B wave coming back up, so we might get a little bit of rally out of this. And that rally might provide a different high for the SPX. We're going to wait and we're going to see. But in any case, this is detailed. Now we're on a 15-minute chart. So it's A, B, C, B, and then come down in a C wave, put the 4 in. Our markers are 68,038, and the second one is 6797. So 6,800 in terms of gamma, in terms of levels, is important, and I think it will remain important up through and including Wednesday, which is Fed Day. So again, next week, well, not everyone, but most are like, oh yeah, it's a given, it's a given, it's a given. Fed's going to cut, Fed's going to give us a 20 basis point cut. And it's like, I think people say, don't take it so lightly. Honestly, because I don't think succumbing to political pressure, if that's what's happening, is actually the best thing for the economy because I don't know, but they may give us another 25 basis points because their goal is to lower interest rates, right? That's what the government is screaming, lower interest rates, lower interest rates. But I got to tell you, if we pay attention, if you happen to trade T-bills, if you happen to trade any of the bonds, for the most part, short term, right? The bills, the interest rates are dropping. They were closer to 5% a while back. They're now under and continuing to auction lower under 4%. So, and the 5-year note and the 10-year note and the 30 years and the 20-year notes, they're the yields are rising a little bit, but that's just reinverting the yield curve. So they want to pay less for the near term money and give more for people to buy these long term bonds. So yeah, but that's how they're lowering interest rates. So they are achieving their mandate. And for that, I think that the current Fed, for what they have to work with, are doing their job. So let's see what happens. A couple of things just come into my mind, and I'll just share them. I think it's like we're likely going to get a 25 basis point cut, but then that's it. That's it. So instead of being this, whoa, we're going to get more, we're going to get more, because I know there are analysts that are talking about, big rate cuts next year. just kind of doubling down on all this stuff. It's like the only way that can happen, folks, is if we're printing money. And I don't think that that's necessarily going to be happening. We need to print money to service our bills, the U.S. But I don't think so. So I think if it could be, okay, we're lowering it to 3.5, 3 3/4. You know, that's what you're going to get, or 3 1/4 to a half, whatever that window is going to turn into, and then that's it. Because I don't think the economic numbers, are going to be supportive of it at all. And so I don't think we're not getting non-farm payrolls that we were supposed to get today on Friday the 5th. Didn't come. We're going to get them next week. I doubt it. Going to get it after, probably. And whatever. So again, I think it could produce an algorithm that's going to go Yahoo Mountain Dew and just take everything and do it just to surge higher. And then that's it. That's it. Hit, sold, 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 sold. And I think, yeah, we'll see what happens. But I think we will get that rate cut. And that it might be good for interest rates, but we'll see what happens. We'll see what happens. I think it could mark the completion point. Because if the country's not willing to deal with the debt, not this bickering that they are going through, very little is being done for the country, you know, with a plan. And a lot of talk, a lot of banter, but we need evidence. And so we'll see. We'll see how this all happens. Elliott wise, I think we got the 3. We're working on the 4. This is the minuet. I'm going to just pull this back out to the hourly. There's the minute. We're in minute wave 5. If I pull it back out, it's in minute wave 5 of minor wave 5 of intermediate wave 5 of primary wave 5 of cycle wave 3. We are getting there. And we're again close to that 7,000. I do feel strongly that we will go across this level. So it's a 69.48, I believe. Let me just double check again. No, it's actually over here. 69.54, current all-time high in the ES. I do think that will be broken. And I think it has to be if this count is going to be correct. Anything less would become a failure and set the stage for something not very nice. So I think, yeah, we should get up there. I believe that 7,000 is going to be traded. We do have layers still above. We have 100% where minute wave 5 would be 100% of minute wave 1, which is pretty big. That's at 72.26. I do not think that that's an unrealistic level. And I do believe that by the end of December, we could be there. I know the algorithms, including my own, that are basically saying that December the 10th to the 12th. That's a little bit of a window that looking for a top. And then we decline. And then towards that last week, which is the major, major week to close everything out, push it around, do what you got to do, and get ready because we're going to expire on the 31st of October, the 31st of December. I believe it's a Wednesday. Yep, it is. Last day of the year, last trading day, lots is going to get shifted around. So, expecting in that last week to have a rally, right towards that year end number. All right, that's going to be it. I've been talking for quite some time, and so thank you very much for spending some time with me. And our next update will be on Monday morning. I'm going to try to get this out, and then also the NASDAQ and the Dow and the precious metals as well over the weekend. Lots happening in our markets.